Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets companies hide in their filings. And let me tell you, Abpro Holdings has a few things going on that are definitely worth decoding, especially when it comes to trying to stay listed on a major stock exchange. Today we're diving into Abpro Holdings' proxy statement for their 2025 annual meeting of stockholders. And while it's full of the usual corporate jargon, there's a major story unfolding about their stock price and their efforts to keep it from being delisted from the Nasdaq. Let's start with the big picture on how the company is run. Abpro Holdings, like many companies listed on the Nasdaq, needs to meet certain rules to stay on the exchange, basically meaning their stock price has to stay above a certain level, and they need to have a certain number of independent directors. They are saying here that most of their directors are independent, which is good for good governance, meaning they're not just buddies of the CEO with no say. This is important because independent directors are supposed to look out for all the shareholders, not just management. One of the key things happening at this meeting is the election of a director named Ian McDonald. The board is backing him to keep his seat, and they really want you to vote yes for him. Now let's get to the major reason for all this, the reverse stock split. The company is proposing to do a 1-for-10 reverse stock split. This basically means for every 10 shares of stock you own, you'll end up with just one. Why would they do this? The main reason is to avoid being kicked off the Nasdaq. They received a notice because their stock price has been below $1 for too long. Nasdaq has a rule that says your stock price needs to be at least $1. If it stays below that for too long, they delist you. They've got a certain amount of time, about 6 months, to get their stock price back up over $1 for a continuous period. If they don't, delisting becomes a real possibility. And being delisted is a big deal. It means your stock becomes much harder to trade and fewer people will want to buy it. Imagine trying to sell something in a tiny obscure shop versus a big well-known mall. That's kind of the difference. But here's where it gets interesting. While they hope this reverse stock split will fix the price issue, it's not a guaranteed magic bullet. The report itself admits that sometimes these splits don't actually help the stock price in the long run, and it could even make it harder to trade. It's a bit of a gamble. Let's look at the fees paid to their accountants. Wolf & Company PC is the accounting firm they want to keep for 2025. For 2024, they paid Wolf $902,000, and before that, another firm, Markham, got paid $23,724 and $356,000, $386,386 in 23. These are the costs associated with making sure the company's financial reports are accurate and that they're following all the rules. Now, usually the most interesting part of these filings is who owns what. This table shows us the major players. Abpro Bio International Inc. is a significant owner, holding about 20.6% of the company's shares. Atlantic Coastal Acquisition Management II LLC, which sounds like the sponsor or initial investor group, holds about 18.4%. And Ian Chan, who used to be the CEO, owns around 12%. It's common for insiders and early investors to have large stakes, but this gives us a snapshot of who has the most say. Let's talk about how these key people were compensated. This table shows what the top executives earned. Ian Chan, the former CEO, received $521,754 AFOI in 2024. Robert Markovich, the chief medical officer, earned $483,577 in 2024. Interestingly, Ma Suk, the current CEO, isn't listed with any salary for 2024 in this summary. This could be because he took over later in the year or his compensation structure is different. The report does mention that executive compensation will likely change now that they are a public company. Now, what's my take on all this? Abpro Holdings is in a common situation many smaller public companies find themselves in. They're trying to keep their stock price high enough to satisfy Nasdaq rules, and they're using a reverse stock split as their primary tool. The risk here is that if the market doesn't react positively or if underlying business issues persist, the stock price could still fall, making the split ineffective and potentially leading to delisting anyway. The significant ownership by Abpro Bio International and Ian Chan suggests a vested interest in the company's success, but the lack of reported salary for the current CEO in the summary table is something to watch. We need to see how their executive compensation evolves as they operate as a public company. For now, it looks like they are actively trying to navigate the challenges of being a newly public entity, and this meeting is a crucial step in that process. Alright, that's our breakdown of Abpro Holdings' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.